All right, ladies and gentlemen, we are going to approach the market one more time from the bigger picture, just so you guys review. So this would be documented as the bigger picture part two. And let's go ahead and begin. Of course, as always, the bigger picture must be started on the monthly time frame. So again, we are on the monthly time frame, a completely different currency chart, and don't matter the pair, just focus on the actual time frames and the actual trading patterns that the market is giving us. Forget the trading pair. That does not matter at this moment. We just want to look on the bigger picture, and right now we are just identifying the movement in the market. So I have the 200 moving average, I have the 21 simple moving average, and let's begin. Now I'm gonna go ahead and drop a vertical line here. Now, if you look to the left of this vertical line, as you see, price is reacting differently to the moving averages. If you look to the right of this vertical line, you'll see that price is moving in a whole nother type of reaction, and price is reacting differently to the moving averages in the markets. Now, on the left hand side of the markets, we do have the price that is it's warily bouncing and struggling to achieve price above the moving average. So we do see bearish movement, and we do see bearish sentiment in the market. Now on the left hand side, as you see, we see price that has crossed over the 21 moving average, but is now bouncing on top of the 200 moving average. That is also signifying a reversal and bullish momentum entering the market. This would be a particularly bullish rally from the low to the high, retracing, and right now we see price bouncing on the 200, and in real market data that would particularly be around the 50 to the 61.8 of the that would actually be between the 31 and the 50 retracement on the Fibonacci. Prime entry level to continue up for higher highs. As you see, price is now above both of the moving averages. Well, it's above the 200. Price is bouncing above and showing real strong bullish rallies above the 21 in that direction. Now, okay, so starting from the left to the right, as we do see that price was in a range. We can clearly see a range based on the lows and highs in this particular area. Now, again, we're just looking at the bigger picture, okay? So we do see price was in a range. We see it breaking out to the downside. From this bigger picture, we can begin to see how that particular pattern broke out. Now, as you see, when price has broken above this trend line here on the monthly, this area is also in conjunction with the previous support level over here to the left. So now this would ultimately become support, a supportive area. Okay, we do have to wait and confirm on what price action does do in this particular zone. But from a price action and long-term bigger picture approach, that does look like a supportive area. But as we get deeper and closer into the current price action data, we'll be able to determine which role that zone is in fact going to play. So looking from the left, you see we do break down in here, and now right in this zone, as we form the low, we see price bounce and cross back over the moving average, indicating a short-term bullish opportunity, which in fact led price to cross over the 200 moving average, which in fact now brings in long-term bullish momentum. And as you see, price is consolidated right on top of that supportive area on the monthly time frame. So once we've done the monthly time frame, what do we do now? We bump down one level to the weekly. Now at a weekly approach, we see how price is in fact playing support in that zone. We do see multiple bounces, 1, 2, 3, 4, 5. We do see structure has not been broken to the downside. Now we can in fact consider price to now be heading towards the upside in this approach. Now, if we come back to the monthly and we do pull out our Fibonacci, this is the situation that we are now left with on our charts, which in fact, here brings price in that manner. All right. So that would bring price to be in a supportive area. We could then remove the Fibonacci from there because we do have the retrace. And now we can see how price would proceed to bounce through the top of that range. Now, remember what I said about ranges in the previous content. You buy at the bottom of the ranges, you sell at the top of the ranges. Here in this particular situation, we are at the bottom of the range, which would imply we would be buying at the bottom of this range, potentially selling again at the top of this range, depending on price action movement once we approach that area. Of course, if price proceeds to exceed that level, we would continue to buy and not, in fact, sell. All right. Now, this is again the bigger picture. This is the monthly time frame. So again, this is just a long-term analysis. You first want to find the bigger picture before you even consider entering the market.